2022 has been a volatile year in the stock market. In this video, I'll be revealing how my portfolio has performed during the year and also since the beginning way back in 2009. I'll be showing my complete portfolio and how much I currently hold in each company. I'll be going through sector by sector, and I'll also reveal everything I've been buying and selling during the year. This is not financial advice, and I'm simply showing you my own journey. Since 2009, I've been building my dividend portfolio by investing spare money each month into mainly UK large cap companies who pay reliable dividends. I reinvest the dividends and allow them to compound over time. I make good use of a stocks and shares ISA to shield my investments from tax. I'll go through each sector in ascending order of performance for the year. In the chemical sector, I only have one company, Croda. It's had a difficult year in 2022, but I've bought into it as I'm confident of a recovery. It pays a low yield, but Croda has a track record of growing its dividend over time. As I go through the slides, this figure shows the average price change in 2022 for the companies I have in a given sector. It's only based on the companies I hold and not the industry as a whole. This figure shows the value of my current holding. This figure shows the price change throughout 2022, and because Croda is the only company I hold in the chemical sector, it will be the same as the figure at the top. And finally, here is the dividend yield. I have nearly £5,000 invested in Croda, so I would expect to receive dividends of around £80 a year. The next worst performer is the retail sector, and I have just one company, Tesco. It pays a reasonable dividend of 5%, but the shares are down 23.5% on the year. I think it's a safe bet for the long term, however, and I'll continue to hold. In the insurance sector, I now only own Aviva, having recently sold Direct Line in late December. It had shown a downward trend for a long time, and I thought the yield looked dangerously high. Direct Line have since cut their dividend to zero. When a company cuts its dividend, this often spooks the market, and the share price crash of around 25% quickly followed the announcement. Aviva, however, pays a fairly decent dividend, and the company returned a significant amount of capital to shareholders earlier in the year, so the dramatic plunge seen on the graph is not actually as bad as it seems in monetary terms. Down 10% is my S&P 500 ETF. While US shares remain low, I've been taking advantage, and I bought more of this ETF throughout the year than any other share, and my holding is fast approaching £15,000. I plan to keep on drip feeding into this one throughout 2023. The banking sector fell 5.8% over the year, with these two experiencing very different fortunes. Both pay reasonable dividends of around the 4% mark. Both Lloyds and IG Group pay higher dividends, but just like Barclays, these two are down on the year. I don't intend to add more to the banks next year, but I think HSBC is the better bet. Down 4.4% is the utility sector, and I own three companies. These two pay a yield of 5.2%, and I've held both for over a decade. The third company, United Utilities, is also well down on the year. Next is a FTSE 100 ETF, which is more or less unchanged for the year. This ETF gives you exposure to the 100 largest listed companies in the UK, and when I can't see any individual bargains, I'll buy a few more shares of this one. The dividend is 3.8% spread over 4 payments a year. I think as the years go by, I'll slowly be shifting towards ETFs. In the consumer goods sector, I have 3 companies. Diageo and Unilever have strong brand loyalty and can usually cope well in a recession. As you can see on this slide, they have a good track record of maintaining or even raising their dividends, which is usually a very good sign, and I'll continue to buy these two in 2023. Haleon is a relatively new company, having been spun off from GSK. They had a bit of a shaky start, but you can see from the graph they have been rising strongly since September. Perhaps one day they could be a takeover target, which might push the share price even higher. I'll be keeping a close eye on Haleon. They don't pay a dividend at the moment, but expect a modest one in the near future. And now for the risers. This ETF has the ticker code VHYL, and it gives you exposure to nearly 2,000 mid to large cap companies from around the world who pay higher than average dividends. I've only recently started buying this ETF and plan to invest a lot more in the year ahead. It gives me great diversification as well as a fairly decent dividend. The renewable energy sector rose 3.4% in 2022, and I have three companies. Bluefield Solar specialise in solar energy and Greencoat in wind. Both pay a very impressive dividend spread over 4 payments a year. The third is the Renewable Infrastructure Group, which has a mixture of solar, wind and battery storage assets. The Pharmaceutical Sector has done well overall, up over 10%, but very mixed fortunes for these two. AstraZeneca is up over 30% while GSK has struggled. I do think it's now a more streamlined and focused business, and I think GSK will do well in the years ahead. Out of all the shares I own, AstraZeneca has probably been my best investment, and I started buying it more than a decade ago when it was around £25 a share. Up 11.2% is the food and tobacco sector. British American Tobacco and Imperial Brands have both had a very good 2022. Not only has the share price grown strongly, but they both pay high dividends of well over 6%. Tate and Lyle has not fared so well, but there was a return of capital to shareholders, and they are a very well-run company, so I'm happy to hold for now. Defence and Aerospace is up 14%, with BAE Systems having a very strong year as countries around the world boost their defences. Rolls-Royce has had a very difficult year, but I've bought into it for the first time in 2022, as I believe air travel will eventually recover strongly. It may take time, but I'm prepared to wait. This is another company which I intend to buy more of in the year ahead. My second best performer has been the mining sector, and I only have Rio Tinto, and what a year it's been. The shares are not only up nearly 18%, but they pay a huge dividend of just under 10%. Whether Rio can maintain this high dividend is uncertain, and the mining sector can be very volatile. My highest performer of all has been oil and gas. Both Shell and BP have risen strongly, and they make up a significant part of my total portfolio. Like mining, they're a cyclical sector, and while they remain strong, I've been reducing my holding to rebalance the portfolio. Now, before I reveal all my purchases and sales for the whole year, please consider giving that like button a quick tap, as it really helps out the channel. Thanks. With my portfolio paying out fairly large dividends each month, I don't always have to put new money in to buy shares. As you can see in this table, my largest purchases have been in Unilever and also the S&P 500 ETF. Rolls-Royce, the All-World ETF and Haleon were new additions to the portfolio. As mentioned earlier, I've trimmed the oil and gas giants BP and Shell to rebalance the portfolio and reduce risk. Direct Line has been completely sold, with most of that money going into the S&P 500 ETF. And for complete transparency, I did buy and later sell around £500 of HSBC. The number of shares remain the same. Cash in the portfolio sits at just under £3,000. Now for the portfolio performance. Since my last update in November, the portfolio value has increased by £5,674, with no new money going in at all. So how have I done in 2022? At the start of the year, the portfolio had reached 301,000, and at the end it was 359,000. 16k of new money has gone in, giving me a yearly gain of over £41,000. So despite a very volatile year in world markets, this portfolio produced a net gain of 13.8% in 2022. I'm now going to compare the performance of the portfolio with other indices. To do this fairly, I'm going to strip out any dividends I've received throughout the year. This still leaves me with a capital gain of 9.1%. You can see in this table how the performance compares to other indices. I've clearly beaten the market over the year, but it doesn't mean I will over the long term. Oil and gas have done extremely well for me recently, and there will come a time when it will underperform. Now I'll look at my overall performance since I started in 2009. I made plenty of mistakes in the early days as I was learning, and I hadn't even heard of an ETF back then. We can all do better in hindsight, and if you want to see all the mistakes I made when I started out, then I'll leave a link to that video at the top of the screen. I like to be fully transparent here, so I'll show you the complete results, both good and bad, right from the start. The total amount I've put into the platform is 225k, and its current value at the end of 2022 was 359k, giving me a gain of 134k, or just under 60% if I were to sell all my shares today and walk away. It's not the capital growth which really motivates me, however. It's watching those dividends grow from year to year that keeps me at it. Generating a passive income stream can eventually give you options of how you choose to use your time. Now, the mysterious YouTube algorithm has predicted that you will enjoy this video next. Let's put it to the test and I'll see you over there.